Good morning, traders. It is 8:03 a.m. Chicago time on July 8th, 2014, a Tuesday. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. The overnight news feed doesn't show very much. It shows UK industrial production at negative 0.7% versus plus 0.3% month on month expected. So that was a 1% miss there. That's the biggest fall since August 2013 in that number. UK manufacturing negative 1.3% versus plus 0.4% expected. And then the US Red Book came in just a moment ago. Negative 1.2%, which is better than the previous, which was negative 1.7%. Goldman lowers jobless rate forecast for the U.S. to 5.9% for the end of 2014 and 5.4% for the end of 2015. I don't have much more than that as far as news is concerned. Looking at what's on the calendar, we have Jolt's job openings at 9. This is a medium importance number. And then at 2 o'clock Central, again, all-time Central, 2 o'clock Central, we have consumer credit. The consensus is 20.0. This is a May number. Speakers at noon today, Fed Speaker Lacker speaks on the economy in North Carolina, non-voting hawk. At 12:45 Central, Fed Speaker Kosher Lakota, a dove on monetary policy in Minneapolis. And after the market today, we kick off the next earnings season with Alcoa. Expectation is 12 cents on their EPS. As far as supply events, seeing 10:30 today, 4-week bills for $25 billion, and at noon, 3-year note auction for $27 billion. Going out to the 15th of July, 2017. Let's look at the marks and what the markets are telling us, which is really the bulk of it. This is my overnight chart. This is actually a 24-hour chart. You can see last Thursday's activity right here, very tight. And then yesterday's overnight session, it tested the 77.50, the prior day's high. So we have a double top up here. That's why you get these pink bubbles down here. I always want to see where double tops and double bottoms are. And then it started to drift lower to test 71.25. 71.25 happens to be, this is Thursday night, happens to be the low of Thursday's session. Okay, 71.25 right here. So that's where we had a double bottom on the overnight versus the day session on the last session that we had last week, which was Thursday. Friday's a holiday, and then the expectation, if you recall from yesterday's Trader Bite, the expectation is for an open auction in range and a potential test of 75. If 75 finds sellers, then the expectation is 68.5, 67.5. Okay, and that's exactly what we got. We'll talk about that in a moment. Overnight, the last night's overnight session retested the closing. It opened right at the closing price, and then just drifted sideways. We have a balanced profile overnight, not telling us very much, except that it has more volume than the prior session. By 8 o'clock on yesterday's overnight session, we had about 98,000 contracts, and we finished at 110,000 by the time the U.S. stock market opened. Today at 8 o'clock, we have approximately 130,000. It's about 30,000, a little over 30,000 more than we did yesterday. So there's a little more activity here on the overnight. Tonight we have a double bottom now at 66.25. with a balanced profile and a weak low, expecting this to continue lower probably before the open. Other than that, the overnight profile is not telling us very much. The overnight inventory is lower. So we'll see how the market reacts to that. But overall, the market's taking a downward skew, as you can see here. Point of control is high up, lower, 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 lower. Market seeking value lower, successfully finding it. As far as yesterday's session, let's run through to answer the question of what has it done, so we can answer the other questions to provide what the bias and context is for today. Open auction in range was expected. We got that. Oh, I started from home yesterday, so I didn't adjust my open auction in range. Market chopped around. Market chopped around, and then it finally broke higher at 75. It did break the low as expected, so it tested the low here, 71.25, 71.25, pull back to 73, break to 70.50, puts us in the gap zone here that we left behind. And then it finally pushed up to 75, which was listed as the key LVN from Thursday's session and a key area left behind from the overnight session. Tested it, found sellers, and so it pushed through the mid and then attacked the IB low. And so now the targets become 68.50, 67.50 right down here. And what it did is it pushed right through to 67.25, which is nice, because if you're working 67.50, you would have had to be really, really patient. But it ticked the 67.50 before finding buyers into the close, and closing at 71.25, the same price. 71.25 in play again. Today it's the overnight high. Here's the overnight session taking out the low. You can see the last is below the overnight low, as I had just discussed. So the market's is auctioning very methodically and trading very methodically right now. It's kind of moving on its own powers. There is no external news or expectations to price in. So this is a nice thing to have. Looking at several things, so let's look at how value's been moving around. If I've created a new microcomposite that includes the second, third, and yesterday, okay, because we folded back over and are trading and traded back into the range of last Wednesday. And this profile to me looks very incomplete on the downside, so the expectation is I'm expecting this to extend a little bit lower. We have a kind of a funny looking low. If I include the first, you could see how it's fairly incomplete. Brings 1964.75 into play. That's an area you'll want to mark. It's a low volume node that was tested last Wednesday to the tick before the market bounced off, and it's leaving us behind with it's left behind in a very clear LVN, which I think the market's probably going to work itself to. So the cutoff, the key LVNs or the key low volume nodes for this area are 75 and 64.75. We tested the 75 yesterday and failed to continue, so we've pushed down to 67.50, where the bulk of the volume is in this area. The market bounced back up, but then overnight it drifted back through, so the expectation is for a test of 64.75 today. That's what I'm looking for, and then we get into this this buying tail here from the first from last week. Okay, that's how the overall picture for value looks. Value's been moving up until yesterday, and has made the market has made a lower low, lower high, lower value, lower point of control. So the market's in the short term is in a pullback, or the sellers are in control short term. Intermediate term, firmly buyers. long-term firmly buyers as well. Okay. There was something else I wanted you to note on my fundamentals chart. It's interesting as we look at, as the market made highs here, you can see the put-call ratio remained right in the middle. This light color here represents the first standard deviation of put-call ratios going back 1,400 days. But as it made this higher high on Thursday, the put-call ratio shot up, and it has not pulled back. So the put-call ratio shot up, and you might think, people are buying insurance more so than looking for calls. They're buying puts. When the puts are more expensive than calls, the put-call ratio goes up. So as this climbs higher, there's more and more insurance being bought. So I thought, going into a long weekend that may be just a holiday thing where the put-call ratio shoots up as protection through the holiday, but it didn't really pull back yesterday. It actually just moved down a little bit lower. You'd expect it to drop fairly quickly like it does here or here, but it has not pulled back. So it's interesting to see the put-call ratio turn and hold steady. It seems like the value of insurance is increasing. So that's something that I just wanted you to note. Overall, the market's still responding on the delta is responding more readily to selling than it is to buying, even though the dominant force here is the buying force. Let me get rid of these. So the trend is up, but this has been flat. But then as soon as we pull back, the delta values drop very, very rapidly. And this has been the case since last November. It still seems like odd behavior to me, something to watch out for. Okay. On the NASDAQ, so we have a composite that's made up of the same thing as the ES the last 3 days. Yesterday, the low that was put in was exactly the MCLVN at 96.25. The low that was put in yesterday was at 96 even, I think, 96 even. So the NASDAQ has pushed up. It's showing a lot more strength than the ES is. The ES is trading lower. It's actually pushed below the Thursday range. So we had an inside day in the NASDAQ. The NASDAQ S&P spread is trending up. NASDAQ showing strength versus the S&P. But overall, it's had an inside day. It has tested the key point of control, the key LVN below point of control of 39.02, and has bounced up. The next key LVN, if I highlight these, the next key LVN, so 38.9650 now. The next key LVN up is 39.0675. The market's trading 38.98. I'll keep an eye on that 39.06, 39.07 area to see how it reacts if we go back up there. If it pushes through, then you're looking at new highs, because there's a volume peak up here at 12, but there's really nothing keeping the NASDAQ from continuing to push to high at 39.18. Okay, so for today, what is the primary idea? Today, we're trading in the very, very balanced range of last Wednesday. The expectation today is for this to open right on the edge of the range, right where we are now. The expectation is for this to find responsive buying back up to 69.75, 69.70. I mean, 69.75, 70 even. For a test into 70.50, and then that's when we have to kind of wait and see if buyers step in and see this is cheap and continue higher, at which point you'd have 1975 as the key number to test. Otherwise, the more anticipated move is for responsive buying towards 69.75, and then sellers step in to continue to bring this down to that number that I mentioned, 64.50, 64.75, and then if it cannot find any support at 64.75, then we're looking at 1960 retest as the target below for today. Okay, so that's the key idea today. Responsive buying into at the open, choppy open. Not much going on the calendar. So expecting a choppy open, a test higher, failure, and a rotation down to 64.75. If that doesn't hold, then looking at 1960 is the next target. The secondary idea is that it does push lower right off the open, test the overnight low, and then or close to it, and then finds buyers to push back to 70, and then to continue higher, and then take out the 75 for a test of 77.50, which is less likely today. But both those scenarios, or both those plans, have equal weight. The short-term trend is lower, but the overall intermediate trend is higher still. So that's it. As far as headline risk, additional risk, it's the same old story. Not hearing much from not much action on Iraq, and the Ukraine is not a problem, and I have not heard anything else. So there isn't any additional headline risk to worry about today. Just as always, watch your risk and keep your game tight. Do not get emotionally involved with the market. It's not a forgiving thing when you start to trade how you feel, or you start to trade because you're upset or stubborn, rather than what you see on the screen. It's very, very important to be as fact-based about your trading as possible. That's why machines, a lot of people resort to algos and machines executing their plan because they do so unemotionally, and they do so statistically. And you need to try to be as close to that as possible, with the advantage, of course, being human, with the advantage of being able to read and understand context as it's happening. That's it. I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.